If you have any queries on the live stream or anywhere, you can just raise it on the live stream because I have switched it on over there also. Just let me know if you can hear me, and we are gonna start. So, so I'm quite excited to talk to you about today's presentation uh, because it's one of a very interesting sector and it's evolving in a very big way. So firstly, a little bit about me. I'm an MBA by profession, and I have been investing in equity for the last 8+ years. 95% of my money has been invested in equity, and personally, I'm managing some of the portfolios of my family members and friends. Cool. So, few disclaimers. Personally, I might have some position in the stocks to the family office. I might sell without any prior notice. Companies I'm discussing today are not a buy, sell, or hold recommendation. This is not an investment advice. Consult your advisor before investing. And I'm not a SEBI investment advisor. We have already done a lot of webinars. So we have done 11 webinars and we have done more than 40 videos. You can find a lot of the links over there, and some of this is in the premium content. But you can see the returns which we have generated, all these stocks have generated. And today's webinar would be a pay as you wish. So there will be a small link which you can see at the QR code. And this just encourages us to understand where we are going right and if you want to support us in this journey. Great. So we are going to talk today. So first we are going to talk about how real estate have worked in the past 7-8 years. What are the factors which are right now affecting the real estate journey, and why we are right now quite bullish on real estate segment, and if we see real estate in comparison to the India versus world, and what should we keep in consideration, and what would be the final words when we see the this particular real estate sector, and what are the risks involved. Uh, Please, it would not be a monologue. So if you have any query, you can post it on the YouTube or on the Zoom, and I would be happy to answer. You can also unmute yourself and ask me any query which you have. We are going to divide this whole real estate into three segments. Today, we are going to understand real estate, and then we are going to understand about different segments. So Delhi is a different market in comparison to Mumbai, Bangalore, and other places. So we are going to understand about these particular segments, and I'm going to focus one special territory which I am very bullish on, and then we are going to look at some specific companies out of that particular thing. So we are going to divide this whole real estate sector into three webinars. So I hope to see you in the next few webinars also to really learn what this real estate sector is coming up and how we can really benefit from this. Great. So first particular idea comes from Mark Faber. He's a very big investor, and he says, I would focus on India because in the real estate space because they are at the early stages of economic development, but in many sectors of building a large middle class, and then it becomes attractive to own a home. So he says that once a country is developing, a middle class always loves to have a home. The first residential, whether that's nearly Delhi, Mumbai, or anywhere. And second thing is these aspiring millennials and young people who have money want a second home. They want maybe a condo or the beach. They want a house for the weekends. So he says it's not only that India is a middle developing nation that people will want to have their first home, but simultaneously people would love to have a second home as well. So that's where Mark Faber says that he's quite bullish. But let's see why people are so much negative and get so much afraid of investing in real estate sector. So this is a report card of real estate sector in from 2019. So if you see a lot of big players and we all keep hearing these big names, DLF, Godrej Properties, Opera Realities, Brigade Enterprises, Provincial, and Prestige has not given those powerful returns that we expect from a stock market. And to a large extent, they have given negative returns. So DLF, which at one point was thought to be that it will beat Reliance Capital as well, has only given minus 66% in 2019 the returns which were. So that's why a lot of players are gets quite negative when it comes to real estate investing. Simultaneously, there are few other issues also. Many of these have not given meaningful returns, as we have seen just from that particular slide. Simultaneously, a lot of these management is not investment investor friendly. So they rarely have declared dividends or bonuses. And time and again, the issue of corporate governance keeps cropping up. So these are the few issues which keeps propping up in when you think of real estate, and that's why it was a very negative sector. But a lot of things have changed, and we are going to talk that why the things have changed and how we can look at this particular sector. Now, again, I'm just gonna talk a little bit more about that why this was very sector where we should not invest. So today generation is not too keen to buy a real estate. It's a very expensive proposition if you think about you and I. Job hopping within the country and sometimes on foreign shores reduce the needs of owning a real estate for them. Staying on lease rental is a preferred option. And investing in real estate is a too huge a commitment. So I don't have that much capital right now, and that's why if you have to take a house, you need to take a huge amount of loan and a burden on yourself for the next 5 10 years. So that's why these are the negatives which comes in when you are investing in real estate. Technology is another game changer that would make traveling faster, helping people stay long distances yet reach office on time. And cheap data and advancement in technology like AI would reduce uh, the need for physically to be in office. So all of these headwinds that may not allow real estate to be an asset quite well. So understand that these were the negatives, and we are gonna work with them. Yet there is a lot of change because, for example, if you see now during the COVID, people had been working from home, so they have realized that they do need a proper house. And if you are spending 80% of your time inside a house, you would love to have a proper space of that. Simultaneously, my wife and I work, we both require separate room. And simultaneously, if you have a children also, you will require a separate room for that those people study. So if you had a 2 BHK and you're a family of four, now a basic requirement of you all would be to have a house which is bigger so that it can accommodate all the. And finally, we have stocks like Godrej Properties, which has given a return of 800% in just somewhere around uh, 12 years. So 800% is quite a lot of amount. So this particular stock got listed for somewhere around 490, and it was in December 09. So in just 11 years, this stock has given 810% of our returns, which is amazingly well. And I'm gonna say uh, this is again not a recommendation, but I would say, and this has gone quite high. Godrej Properties is a very good name, but there are a lot of unknown stories because yet people are quite afraid of investing in a real estate. Great. I asked a question in the launch of this webinar that which is the company which sold 575 crores of flat in a single day. Can you name that company? Can you try to name that company? Cool. So that company was Godrej itself. So they were able to sell 575 crores of flats in a single day, while a lot of other players in Noida have got unsold inventory. They are not able to sell their flats. So that's what was also happening in the market, and we need to be able to understand that to a large extent, what has happened is a lot of good players are getting the bandwidth, while a lot of small players are not getting able to sell their properties as well. Now, if you look at Indian real estate in comparison to the global, and it's a very powerful slide because what it shows you is Indian real estate is still very minuscule in comparison to the whole world. 60% is still captured by unorganized players. So what I say by unorganized player is you see in your small town, there's a developer who is developing 3 or 4 flats and he's happy doing that. So that's unorganized. He buys land and he says that I'm a developer. So those all would be considered into an unorganized player who doesn't need to have a RERA certification or doesn't have a proper certification from the government to be called a real estate player. So 60% is still occupied by this unorganized market. So India, Godrej, DLF, and all have a huge space to go. Uh, while in the other markets, it's mostly real estate is a very organized sector where everything is documented. And this is also one reason that from 2003 to 2008, a lot of these landlords, people realized that there is a huge value in real estate, and just having a connection with some politician or influential person, they all became the landlords. And that's caused the whole unsold inventory and brought a bad name to the real estate sector. And to understand real estate in a good way, we need to understand what is the GDP contribution of a real estate for that particular GDP. And in India, it's 7%, while in China, it's approximately 14%. So, and just to give you a good statistics, Garden City is a sixth biggest developer in China with a sales of $80 billion, which is higher than the sales of all the developers in India combined. So Garden City is the sixth largest, yet it encompasses all the development which we in Indian market is being done right now. And if you see, on an average, the whole housing value has been comprised of 170 trillion. In India, it is somewhere around 1.5 trillion, and China is the biggest market with 39 trillion. So we have been, all the time has been compared to China in various parameters. Yet in the real estate segment, we are just 1.5 trillion where we lie. Now, as I told you, if you need to understand real estate sector, you need to understand what is the GDP and what is the comparison that housing value over there is. And this shows you the expensiveness of that particular segment. So on an average, it's almost somewhere around 1.5 times. Yet if you see over here, in segments like California, it's 7.1, and in Mumbai, it's 0.6. So it's actually higher than 2 times in Mumbai. That's why the houses in Mumbai are quite expensive in comparison to the other cities in India. So all over the world, the trend is it's mostly lies on the scale of 1 to 1.5 times. But in Mumbai, it's very expensive, and we will understand the reason maybe in the next presentation. But that's very important to understand why real estate and how to capture that particular. Great. So what are the different verticals in our real estate sector? So real estate sector, mainly in the traditional model, used to consist of land bank model, where a person will say, I have got huge amount of land, he will sell it, somehow on some bets he will develop it. But that's a traditional model. It was a very heavy on the asset side, because if you have to buy a land is the biggest cost component in the real estate sector. So if you have to see for a good player, look at whether it's asset light or whether it's a asset heavy. All the players like Purvanchal and other players which closed down their shops, to a large extent, they were land bank model, which they were playing, that they will buy a huge amount of land, and then they will think that the price will invariably will keep on increasing in the future as well. The another model is the residential model. The third model is the commercial, which is the office spaces and the malls. And the last, which is a very new segment coming up, is the warehouses and the logistics. Office space is also very interesting. I might not talk about it today, but it's a segment where we do have a huge arbitrage in comparison to the whole world. So if people are saying that India might not do well in the office space, there's a lot of definitely negative points, but there are a lot of positive points as well, that why Indian office space is still gonna do. Now, what is the new models which are coming up? So the first model which is coming up is a joint partnership model, where 2 or 3 players comes in. One says that I have this particular capability, which is my strength. Other says this is my strength. They all combine, share the equity value, and then they work on this particular project. The another bit which is very important, which is coming, is the brand loyalty. This is a very niche segment, and not all the players can do this, because a player who definitely has a huge brand loyalty and understand that only on its name a property could be sold can only play this segment. But people who are playing, Godrej actually plays a lot in this particular segment. There are some other players also which plays on the brand loyalty. So there will be, for example, you have a land, you will develop it, you will take a loan on that particular property, but you have to take all the pain. Then once the property get developed, then Godrej will enter the space and Godrej will say, now I will market it and make sure this property gets sold. And they will take a cut of this. So this is a very powerful model which is coming up, and a lot of big players are able to rely on this particular model or this particular. Right. Now, there's some very interesting thing about real estate is in the past, there are a lot of players which tried to enter this space. For example, MR, Trump, and other players. But either they have shut down their shop or they have not been able to expand highly. DLF also has from 2008 to 2012 was expanding rapidly in different markets like Chennai, Bangalore, other places, only to realize that it can't expand to all the markets, and finally they have consolidated to few pockets, and now their profits are looking way better than in the past. And this is mostly due to varying policy. So uh, in the next presentation we are going to talk about this particular bit only, that why Mumbai market is way different than a Delhi market, and why in a real estate an outside player like MR or someone which is very big players were not able to succeed in India, and why you see local pockets like Suntech, operating in Mumbai, Prestige operating in Bangalore, while DLF and some other players operating in Delhi side. Now, as I was telling you about the DLF experience, similarly, if you see, a lot of spaces also operate in a very different way. So this is the data from the bit of uh, we have from the bit of markets, and if you will see that every market has behaved very differently. So, for example, Hyderabad uh, has has really grown by 111%. Sorry, the title is wrong, but by 111%, and Hyderabad has grown by 150%. So all the markets are growing quite rapidly over here. But if you see the numbers of are the highest in Mumbai and Pune, and then but the percentages have grown for Delhi the highest. So if we see the Mumbai and Pune market is actually called one of the most resilient market because the prices don't fluctuate over there because the land is quite scarce, and this is one very powerful segment which I'm very bullish on. And if you see, they have been very resilient while the sales numbers are not as good as compared, but in the housing terms, they have grown the highest. And Mumbai is selling 28,607 houses in the first half of the 2021. Now, I talked to you about all the negative things, why real estate was negative and what has happened. Now, what has changed over the past 5 years and why this sector is taking a whole turn? First is consolidation is happening in this space, and to a large extent, all the regional players have shut down their shops. So that's very powerful, which we all need to understand. Now, the larger players have filled their shoes and have captured the market share, thus increasing share by their pie. So if I talk to you, the market share of the big players was only 6% in FY17, which has now increased to 22% in FY21. The government was quite active in bringing right of the individual at the forefront, and RERA real estate regulatory is a game changer. And the biggest point which it says is that now no developer can launch a project without getting a RERA approval, which makes it very mandatory for a player to get listed with the government and making sure that all the norms are getting followed. And as I was talking before, COVID has highlighted the importance of house to the young buyers. And while housing prices have not increased, so at one side, the housing price have not increased, but the interest rate at this particular point is the minimum. So the house remains same, but the interest rate has reduced drastically, and economic is rebounding back. So these are the few very powerful. I'm just going to take a 1 minute break. If you have any query, please post it. Happy to answer, and then we will be going ahead with this particular. Great. So if you have no queries, we are gonna go ahead. Now, what are the changes which has happened after COVID is there was a lot of pent up demand. So there was a lot of demand which was there, and due to which you saw, I will show you the sales number. It has improved drastically for a lot of players, and the ready to move in inventory was available. So, lot of 4 5 years, builders were developing the properties where no one was buying because the market sentiment was very poor. Now people have realized, so once the sentiment has improved, there was a lot of people who wanted to buy only the flats where they can move in. So now they are okay to move in those properties. Maharashtra has cut the stamp duty, and players have moved from affordable housing to budget housing. This is a very powerful move. So government was very proactive on affordable housing. Interestingly, it was somewhere at 40% of the market share before the COVID, and now it has come at 20%. So what a lot of players in the real estate has realized that affordable housing is not profitable. So they are moving to a budget housing, which lies in the category of 80 lakh to 1 crore budget. And banks are also cautious to offer loans to the people with low earning power. So both these factors are becoming quite powerful, where affordable housing is going down and budget housing is coming up. And this is going to be a very powerful because now lot of real estate players have learned from their mistakes, and they are very cautious how they approach this place. And buyers have realized that this is the lowest cost they can have at this particular point of time. And after this, the price is gonna go up. So people who had bought like 8 years back, they still have not seen price appreciation. So now a lot of buyers are buying at this particular juncture because they know that from here the prices are just gonna go up in the real estate space, and inventories are falling. So I was telling you they were developing the houses at for this particular period from 2014 to 2018, but the sentiment was quite low. So, for example, at DLF, the most country's valuable developer, inventories fall from 22 22,000 crores in March 2020 to 21,000 in September 2020 itself. Suntec, and this was the first time that the inventories have started falling. Suntec inventories was down, and the Prestige inventories was also down. So all the players' inventory, so the number of properties they were having has started falling down. And if you see, the unsold inventories is down 1% over here, and it was somewhere over here. So somewhere over here, we were at the peak, and now we have come at a level of one somewhere around 5 lakhs. And please understand, inventories never go zero because properties are getting developed all the time. So that's why you will not see in a time when the inventories goes to zero. So somewhere we have only left with somewhere around 1.5, and this is always a level of where we should be worried, which is like 7.5 lakh inventory, because that is a market when the sentiments are the poorest. So if you see, the inventories have started falling, and in some time, if we kept on going in this particular path, then we will be in a journey where the inventories would definitely reduce. Now, another important parameter to check is quarter to sell. Quarter to sell tells us that if there is 100 flats and I'm able to sell 20 flats in a quarter, then in a 5 quarters, I will be able to sell all my inventory. So this Q2S of 10.9 would improve to 7.6 if two lockdown impacted quarters are excluded. So अगर हम लॉकडाउन का इम्पैक्ट को हटा दें तो ये आपकी 7.6 पे राइट नाउ आ गई है, जो बहुत कम है इन कंपैरिजन जब ये 12 तक चली गई थी. सो तो आपका सेल की साइकिल भी इंप्रूव हो रही है, Q2S भी कम हो रहा है, और साथ में मार्केट में जो हमारी इन्वेंट्री थी वो भी कम हो रही है. Right. So at Prestige, inventories have fallen by 37% in the last 2 years. In contrast, in the last decade, they rose by 571%. So पिछले 10 साल में जो इतना ज्यादा बढ़ा, पर तो लास्ट 2 साल में वो 37% बढ़ गया. Please understand, falling of inventory is a great boom, because when a housing sector inventories fall, a lot of cash comes in the pool. The sentiments improves. With the improvement of the sentiments, banks are going to be more proactive in giving loans to these players, and the interest rates also fall. So if they had a debt of 10,000 crores, the rates changes, and on 10,000 crores, a single percent movement of an interest rate also makes a huge difference for all these players. So that's where it's very interesting that how this is being playing out in this particular space. Now, we were talking about how the fall in the inventories has happened. Now see how the launches has happened. And we were talking about this particular era when the launches were at the highest, and then the kind of a momentum fault, and it was falling, and then there was some peak, and now we again during the COVID, that is the first half of 2020, we fall to 60,000, but we already have an improvement. So market players are also understanding that the market sentiments are improving, and that's why new launches have started coming in. So all these segments shows us that there is a market which is have started to grow, and that's why I feel that there is a lot of things which we can hope for. So now think the new launches are happening at a rate of 1,03,738, and the sales are happening also at a 99,416, and this is at an improvement stage. If this improves a little bit further, then we will be able to start capturing the inventories also, and the whole market will be clear, and then the real estate player who have not increased their prices from so many years would also be able to increase their prices in this particular segment. Now, what I'm expecting in the next 5 years is the cost of funds will decrease, because, as I told you, the debt of these companies are gonna fall, and as we all also know that the interest rate is at the lowest. So a lot of these players are going to renegotiate their debt negotiations, and that's why the whole re-rating of these companies can happen. So because I told you in the first point that because of the debts, the interest rate will fall, and simultaneously because of the interest rate or because of the sale, the debt is going to fall. There will be a lot of land deals which they can have at a right price now, because till now, lot of landowners, they themselves were becoming developer, but now they have burned their hands, and they have realized that that's not the right space, because they don't have the capabilities of developing. So you will see that a lot of well-known names will be developing these properties, and they will be getting at an affordable rate. A lot of foreign funds have started getting interested in this particular space, and tier 2 and tier 3 cities are gonna see a huge uptick, because a lot of people have moved back to their hometown. So that's where we can expect a huge movement in this particular space. Now, so now what is the learning? And there's a QR code. If you feel this particular presentation on real estate has added value to your learning today, please feel free to scan this code, and you can help us create more of these webinars. There are a lot of players who have a tainted history present in the real estate. Therefore, you need to be extra careful while investing in this sector. Simultaneously, every market is quite different. Therefore, rather than a pan-India player, a regional player is preferred. Availability of finance and a strong brand plays a big game when it comes to investing in real estate. So, if I have to invest tomorrow, I'm not going to play for just a player who has been operating in the market or who has been selling. I would actually look for a player uh, who has an annuity also. So, for example, that money keeps coming in this particular player on a continuous basis, that it should not be that one property got very successful, but all his properties are not getting successful. Uh, it's very important that we try to understand this also, that when a real estate player launches a new project, it's like factories he's setting up. So, for example, one project, second project, third project. So you need to see consistency in the success of all the projects. It can't be for a factory that one factory is very successful, but the other factories have got workers problem and other problems. Else the company is not going to make profit. So simultaneously in the real estate, you need to see that all the particular segments are making money for that particular segment. Now, why I am bullish on this particular sector is 80% of the country still needs to be developed. People learn from their mistake and the consolidation of market is happening. Consumer favorable policies in terms of data, and there is a low interest rate. So that's very powerful, which is happening in this particular space. And final outcome, as the market continues to consolidate, expect the sector to produce a predictable stream of earnings and cash flow. Also expect balance sheet to shrink as the productivity of sales would reduce and a need for excessive cash reserves, which we have talked before. So the whole re-rating of the industry might happen, and we can see a lot of benefit coming because of that to all the investors like us. So thank you for today's presentation. I hope you found it valuable. Next time we are gonna cover two particular points. One is a particular geography, which I am very bullish on, and some of the companies which we think is going to be very powerful. Thank you for everyone who joined today, and see you next time. Bye.